Hi there, welcome back to the Family Fire Mission. I'm Jaden, and this is our SITREP 3, where we're going to cover the month of January 2026 and the changes with our portfolio. Just to recap real quick, so we are a single income military family with kids, and our goal is to reach $3,500 of dividends per month. Not really in any specific time frame, but as soon as possible with risk taken into account. So from the top here, so we're still in our launch phase where we're going to be investing into more high risk dividends, higher yielding, higher risk early on. That way we can supplement the amount of income coming into the account, and then from there eventually going into the more stable ETFs and stable incomes. So we have 8 ETFs currently providing income. One of them is VTI, which is quarterly, so that's not really a income that we'll see very often. And we are currently reinvesting directly into WPay and only WPay right now until we have met our allocation goal, which is coming up pretty soon. Actually, we'll be getting there I think in the next 2 months, and then we'll be moving on into YMAX. Our current portfolio yield on cost is 19.94%. Our monthly income for January 26 was $380.82. So we have approximately $3,120 left until we hit our $3,500 income goal, which means we're approximately 10.88, 11-ish% of the way there. Our 3-month average income growth has stabilized as I predicted it would. We were able to capture in the last couple months a more steady, normalized income, and so our average income growth is only $7.58. But one, I'll say it's still positive, so we're still going up, and then two, I hope to be able to increase that in the next couple months, but we'll see here. That means that our time to hit our target has changed to 412 months, which is approximately I think it's 100 more months than what it was at the last SITREP. So with our average income growth going down, our time to the target has increased dramatically. Our total portfolio value is $18,804. That's up $2,200 from last month, largely due to the margin increase that we've used approximately $2,715 of margin, almost exactly 15% of the portfolio at the time, and so that portfolio value increase is largely due to that margin usage. As I said previously, we're in the launch phase, right? So the launch phase for us is taking all of our income that we get and reinvesting all of it back into the portfolio. We're not using any of the income to cover any of our expenses right now. Then moving over to the right side here, we just covered the cash flow status on the left. Now moving over to the right onto the engines here. The engines are what we call our ETFs. So we're looking at WPay as being the one that we're currently reinvesting into, with approximately $127, $128 of income last month alone, and then YMAX being second at $75. You can see here the graph really kind of an exponential decrease down, but that's all right for now. We'll see after we start being able to put more money in these other ETFs being able to provide more income. Looking at our milestones on the very bottom here, we'll cover the fact that we've gone through $350 complete, and now we're looking at approaching $400, about 95% of the way to $400 there. Hopefully we can hit it next month, but we'll see. A lot of this is largely dependent on the overall trend of the market and what's happening in the world, right? So like as the stock market goes down, we're not going to get as much income, but we'll see what goes on here. I'm not unhappy with any of this right now, so I'm pretty confident we're going to continue on with no changes as of yet. Let's go on to our portfolio here. So from the start of our portfolio, really doing this from November of 2025 to the end of January, we're actually down almost 6.1% here overall relative to the Russell. We're 11% off there. We're 7% off, almost 8% from the S&P. About 5% off from the NASDAQ, which makes sense because we are essentially doubly invested in the NASDAQ with QDTE and QQQI, and then the Dow Jones being at 3%. Largely, this negative rate of return is due to Bitcoin, cryptocurrencies kind of being down with blocks and BTCI. We've seen significant pullbacks, especially last week, in Bitcoin and in blocks and stuff. So that's doesn't look great, but we're going to continue doing this. We've set up a system here that I believe is going to be successful in the long run, so we're going to test it out a little longer. Here we are looking at our monthly. At the start of February, so the end of January, we're at $16,281.76 as our total account value. That is subtracting out the $27.15 that we have for margin. So we're at $16,281. From our goal that I calculated, we're approximately $2.4 thousand off. From that, largely due to more not being able to contribute as much as I was hoping. Might have to reevaluate the goal there. Looking at non-drip dividends, currently we're actually not automatically dripping any of our dividends, so all of our dividends are non-drip right now. We're at $380, like I said, approximately $140 off from where I thought we would be, based off of the math, assuming a perfect scenario. Margin interest, though, is down because of the last Fed rate cut. The last Fed rate cut actually reduced our margin percentage, and I don't think I've updated that yet. But down, we were at $22 for the month of January that we paid. That's $2 less than what I thought we would. So that's in green, so that's good. Total investment value is approximately $18,977. So I pulled this straight from Schwab, so it's a little different than what was previously shown on the dashboard there. But that is approximately $1,100 off of the goal. So consistent throughout this. Total deposited, we only deposited about $375 last month, so brings our total deposited to $3,100. That is a key driver as to why these numbers are so low, but that's all right. As long as we can identify the source of that, I'm okay with it. Margin remaining, so we're at 85% equity, we're good. Actual margin debt was just under $2,715. The expected was only $885. So we're using more margin than I'd originally planned, but I made that decision very deliberately. So again, I'm not really worried about it at all. Now looking forward to, I started dabbling a little bit really in Snowball Analytics after watching a couple other people here on YouTube. So Snowball Analytics, I uploaded my portfolio here, Family Fire Mission. You can see this is as of today, which is the end of the market day on February 2nd, our portfolio value is 16,108. Total profit, including dividends, is 9,300, but that includes some selling of shares before I started the actual dividend income portfolio. Passive income percentage is approximately 21.92%. I want to point out here, so I have our different phases that I've decided to call these. So we've got the launch phase, which consists of WPay, which is what we're currently reinvesting into, and then YMAX, BTCI, and blocks. So I think the order will be WPay, YMAX, blocks, and then BTCI in reinvestment order. So once we get the maxed out of WPay, we're going to move to YMAX there. And then cruise, we've got QQQI, XDTE, QDTE, and SPMO. And then for our terminal ones, we've got SPY-I, which we haven't purchased any yet, VTI, and SCHD, which we also haven't purchased any yet. And then I needed to put our cash somewhere, so it's here. And that's our margin balance as of today. And then we'll go to here, and we can see that the overall, we're looking at WPay is almost 26% of the total portfolio right now, which is pretty high. Blocks being the next highest. Blocks is really only the next highest because it has not had much erosion. The YMAX has eroded quite a bit here from what we originally had. So then we'll move on to the growth here, so we can look at another chart of how we're not performing as well. But we can do year to date of the portfolio is down approximately 3.26%, and whereas the S&P is up almost 2% there. So I just want to close out with that this is not financial advice. This is just one guy sharing our story and where we're at. And if you've paid attention for any of this video, we're not doing well right now, but I am sticking to it, sticking to my guns. We're going to see this thing through to the end here. And yeah, join us next time. We'll have the 2-week checkup approximately mid-month in February, and then another SITREP at the end of February, beginning of March timeframe. And I appreciate you watching, and I'll see you later.